In this video, I'm going to tell you where the market is going to be climbing over the short to medium term. There is something brewing out there, and not a lot of people are paying attention to these macro forces that are impacting property prices. Let's get my face out of the way. So this is an article out of the AFR, came out yesterday evening. And it's talking about supply. Basically, this consultancy firm, Charter Keck Kramer, estimates that there are 41,200 apartments under construction and being marketed across capital cities in 2023. But these are expected to fall to 27,000 in 2024 and down to 11,000 in 2025. This is 30,000 unit shortfall over the next 2 years. So this apartment supply is forecasted to shrink by more than 73% nationwide. This is huge. It basically goes in to talk about where specifically. So in Sydney there's a shortfall, in Melbourne there's a shortfall, in Brisbane there's a shortfall, in Canberra and in Perth. And this is specifically for apartments. Here's another article talking about this similar supply shortfall that's happening over the short to medium term. And this is all happening amidst a shift that's happening in the property market, where basically a lot of private banks, a lot of hedge funds, and international institutions are looking at the Australian property market and saying, hey, that's a good, robust economy. The government handles itself well. All of the right signals are coming from that market. We want to start investing there. So let's have a look at this other AFR article. Here it talks about Tim Gurner and real estate financier Qualitas have secured $2 billion in capital from an offshore international investor to drive growth in the build-to-rent market. Now, build to rent, for you people out there that don't know what it is, basically this is when private institutions, developers, builders go out and build a bunch of apartments, and rather than sell them on the open market to homeowners and investors, they say, you know what, we really like this investment, we're going to keep it all to ourselves and then just rent it out. Now, the interesting thing about this is this is at its infancy and it's growing. So if you have a look here, okay, here we go. So you can see that here, with $3.2 billion raised across 2 build-to-rent funds, they're creating a pipeline of another 3,500 rental apartments. And they're expecting to have the goal of buying and owning 5,000 apartments worth $5 billion by 2026. So during this time where there's a massive shortfall in apartments, you've got private institutions coming in and doing sites and then keeping them for themselves. You can see here that the institutional ownership of rental units in America is as high as 11%, and it's only just starting here in Australia. I believe that this is going to continue, and these institutions will look at our market and say, this is a really good investment. They're going to buy bucket loads of apartments in major metro hubs and hold on to those investments. This is going to exacerbate the rental crisis that we're already in. Over the last 12 months, we saw rents grow by about 15 to 30%, depending on where you're looking. Now, let's add some more fuel to the fire. Now, what you may or may not know is that migration in Australia is set to rebound at pre-pandemic levels. During the pandemic, a lot of you that have been following me know that I've spoke about the fact that basically Australia lost 473,000 migrants. We didn't get any people coming in and out. That happened because of COVID. Normal. But it's now rebounding and people are coming back into Australia in droves. It's a great place to live. It makes a lot of sense. There's heaps of people that want to come back into the country. The other interesting thing is that the new government that came in increased the cap. Yes, there was a cap on the amount of migrants that could come into the country. and they increased it by about 30,000 people. So we're going to have an additional 30,000 people coming in on what was our previous migration cap. So that is going to have a big impact on rental prices over the short to medium term. And over the long term, people take time to migrate into the country. And once they eventually become permanent residents, that's when they look to then buy. So that'll increase the price of property over time. Again, just to add a little bit more fuel to the fire, you've got 40,000 Chinese students will likely be coming back into Australia. And this is off the back of the Chinese government basically saying to all the students that were registered in Australian campuses, what they said to all the Chinese students registered in international campuses is you've got to go back and complete your course in those countries in order for China to recognize those degrees. So Australia has 40,000 Chinese students that will be likely coming back over the short to medium term to finish their degrees. But more importantly is all of these students that weren't coming into the country during the pandemic are likely to continue now coming back over the medium to long term. So this again is going to add a lot more pressure to our rental system. So where is this big story going? Now for me, for a lot of you that have been watching my chats on here, I'm very bullish on the Melbourne market. If you have a look at what's happened historically during COVID and what's happened over the last 12 to 18 months, a lot of the property markets ran. Sydney property market ran almost 30%. The Brisbane property market ran a little bit more than 30%. Melbourne only grew by about 15 to 17%. So the gap between Melbourne property and Sydney and Brisbane property basically shrunk. So basically it grew, So Brisbane is just behind Melbourne. It's now only, I think, 7 to 10% cheaper than Melbourne to live in Brisbane. This happened because a lot of the internal migration, people left Melbourne, went to Brisbane. Property prices increased. Now, Sydney and Melbourne have typically been pretty close to one another. There's been about a 20% price gap between the two, 20 to 30% price gap. But that gap has widened significantly over this last run. I truly believe that over the next 12 months to say 36 months, that price gap is going to decrease a lot. Now, over the longer term, which is more important, the Melbourne as a city is projected to have a bigger population than Sydney over the next 7 years. So in that time, as the population increases, as the city captures more of the international and national migrant market, people moving into Melbourne, that's going to put a lot of upward pressure on prices for both rent and for people buying the properties over there. So look, that's a really long-winded way of saying that for all of you people that are looking to buy property, Melbourne is a really good, viable option. Apartments are good, townhouses are good, houses are good. Over the short to medium term, I think you can make a lot of money buying apartments. Now, that's a contentious thing for me to say, but watch this video, take note of it, save it, put a note and email it to yourself in 12 months from now, and let's see if I'm wrong. Anyways, happy investing to all of you out there.